Welcome to Talk Tickers. Today we're diving straight into Aurora's first quarter 2025 business review.
Yeah.
The big headline, well, they've officially launched commercial driverless truck operations.
That's the one, a huge milestone.
Exactly. So our mission today is to really unpack what this means for Aurora and for the whole autonomous trucking industry. We'll cut through the noise, give you the essentials.
Sounds good. So looking at the numbers first, Q1 operating expenses came in at $211 million.
Okay.
Or $177 million if you pull up the stock-based compensation.
Right.
Their R&D, which is key, right? Excluding stock comp, that was $153 million. But interestingly, there was about $871,000 in pilot revenue in there.
Oh, okay. How does that work?
They actually recorded it as a contra R&D expense. So it basically reduces that R&D figure slightly, a small income stream already.
Gotcha.
And then SG&A, again, excluding stock comp, pretty lean at $24 million.
And cash burn, how did that look?
Operating cash use was about $142 million for the quarter. Capital expenditures, just $8 million. Both actually came in below their own internal targets.
So significant R&D spending, which, you'd expect, but that little bit of pilot revenue is interesting, and it seems like they're keeping a decent handle on spending.
Pretty much. They finished the quarter strong, cash-wise. Nearly $1.2 billion in cash and short-term investments.
Wow.
Yeah. And that includes $68 million net from a recent share issuance they did.
Okay. So what does that mean for their runway?
Well, this liquidity position, they now expect it to fund operations right into the fourth quarter of 2026.
Into late 26. Okay.
Looking further out, they do anticipate needing to raise more capital somewhere between $650 and $850 million before they hit positive free cash flow.
And when are they projecting that?
Still targeting 2028 for positive free cash flow. But the really significant thing for the immediate future is they started recognizing actual revenue in April.
With the driverless launch.
Exactly. So we'll start seeing that properly reflected in their Q2 results.
Right. Let's get to that. The game changer. Commercial driverless trucks actually running between Dallas and Houston. This isn't just testing anymore, is it?
No, this is live. It's commercial revenue-generating operation, a really major step.
And what are the early numbers looking like?
Well, even just starting out, they've already logged over 4,000 driverless miles.
4,000 already?
Yeah, for key partners like Uber Freight and Herzbach. Right now, they're operating 2 driverless trucks daily.
Okay.
But the plan is ambitious, scaling up to tens of trucks by the end of this year, 2025.
Tens of trucks. Okay. And what kind of runs are these?
Initially, they're being strategic, focusing on daytime runs, clear weather conditions, hauling standard 53-foot dry vans, and also refrigerated trailers.
Makes sense. Start simple.
Precisely. They're calling it a crawl, walk, run approach.
Yeah.
Really making sure the product experience is seamless and, reliable for the customers.
That sounds smart. Build confidence, work out the kinks.
And importantly, they expect to bring more customers onto these driverless operations in the coming months.
Okay. Now, whenever we talk driverless, safety is obviously paramount. What did they say about validating the safety for this Dallas-Houston launch?
They really emphasized this. They said the safety case for that specific launch lane hit 100% on their internal benchmark, the Aurora Readiness Measure, or ARM.
100% ARM.
Which basically means they validated the AI driver and the specific trucks they're using for fully driverless operation on that route.
And the trucks themselves.
These initial ones use their first-gen commercial hardware, but crucially, they're equipped with full redundant safety systems.
Right. Redundancy is key.
Absolutely. And to build trust, they've also published a detailed driverless safety report. It outlines their whole approach, risk management, cybersecurity, all of it.
Good. Transparency helps.
Yeah, and they mentioned they're actively engaging with regulators, law enforcement too. They even highlighted supportive comments from Texas Governor Greg Abbott.
Okay.
Plus positive signs from California's draft rules and the new NHTSA framework. So it feels like they're trying hard to operate safely and play by the book.
It sounds like a solid foundation, not just rushing into it. So the big question, how are these things actually performing on the road?
Performance seems strong so far.
Yeah.
They reported that 95% of the loads using their production software hit a 100% score on their Aurora Performance Indicator, the API metric.
95% hitting 100% API.
Yeah. In Q1, that actually beat their internal target, which was 90%.
Impressive.
And they highlighted the AI handling tricky stuff like, aggressive human drivers, complex construction zones, things you definitely encounter out there.
Sure.
And here's something potentially huge for the economics. Fuel economy. They're already seeing benefits over 10%.
Over 10%, just starting out.
Yep. And their simulations suggest potential savings could eventually be greater than 30% as the tech matures.
Wow, over 30% fuel savings. For you listening, that could fundamentally change trucking economics.
It really could. It's a massive potential lever on operating costs.
Okay, so performance is looking good. Where do they go next? What are the expansion plans?
The plan for the second half of 2025 is to expand commercially to the Fort Worth to El Paso lane,
Okay, further west.
and then extending that out to Phoenix. They're also aiming to broaden the operating conditions,
Meaning?
meaning adding nighttime driving and handling adverse weather. Think rain, heavy wind. Also targeting the second half of this year for that.
Nighttime and weather. That's crucial for real utility.
Absolutely. And they made a point about efficiency, suggesting these trucks could potentially cut single driver transit time in half on those long routes.
Having transit times, again, think about the impact on logistics, delivery speeds. It's huge.
It really shifts the paradigm.
Now, to scale this up, partnerships are critical, especially on the hardware side. Who are they working with?
They stress their strong partnerships with key OEMs and Tier 1 suppliers. You know, the big names. PACCAR, Volvo, Continental, Fabrinet.
Right, the established players.
Exactly. These relationships are fundamental to scaling, and they reported good progress on their next-gen hardware kits.
Second and third gen.
Yeah. The second-gen kit is expected to bring a significant reduction in hardware costs. They've already got B samples in for testing.
Lower costs are vital.
Definitely. And the third-gen kit, which they're doing with Continental, that's designed for really high-volume production. We're talking tens of thousands of trucks.
Okay, so a clear roadmap on the hardware side for cost reduction and volume.
That's the plan. It's crucial for their long-term profitability as they grow the fleet.
Now, there was also some news on the leadership front.
Right. John Donahoe, big name, former CEO of Nike, ServiceNow, eBay. He's been nominated to join their board, pending shareholder approval, of course.
That's a heavy hitter for the board.
It is. On the other side, though, co-founder and chief product officer Sterling Anderson is set to leave Aurora at the end of May.
Interesting. A major addition, but also a co-founder departing. Something to watch. Okay, let's circle back to the financials. Cash usage outlook, funding needs.
Yeah, they did update their guidance. Average quarterly cash use for the rest of 2025 is now expected to be in the $175 to $185 million range.
So, up a bit.
Up a bit, yeah. They said it reflects higher planned capital spending and continued investment in hardware development.
Okay. And that impacts the total capital they need to raise.
It does. The anticipated raise before hitting positive free cash flow is now pegged between $650 and $850 million.
And the reason for the increase?
Primarily, they pointed to the commercial launch happening slightly later than originally anticipated, and also a strategic choice to want sort of extra financial flexibility to really push their market lead.
So buffer room, basically.
Kind of.
Yeah.
They did reiterate, though, that the overall financial ambitions they laid out back at their 2024 Analyst Day still directionally correct, just, maybe shifted slightly to the right on the timeline because of the launch timing.
Got it. And they still expect those high gross margins.
Yes, still expecting high gross margins by 2027, driven largely by deploying that cheaper third-gen hardware.
Okay, so timeline tweaked, but the end goal seems the same. What about competition? How does Aurora see the landscape?
Their view seems to be that maybe some competitors are underestimating just how complex this is.
Complex in what way?
Specifically, things like actually industrializing the hardware, building those deep OEM relationships, and just the sheer rigor needed for safety validation. They think their automated software testing strategy gives them a real edge there.
So they feel their approach is more robust, maybe more grounded in the complexities.
That's the sense you get. They seem confident in their path.
And what about the customers who are actually using this now? What's the feedback?
They describe the feedback since launch as overwhelmingly enthusiastic.
That's what you want to hear.
Absolutely. And they said their plans for scaling the fleet and the operating conditions will be guided by that real-world experience and fundamentally demonstrating value to those customers.
Makes sense. Learn as you go.
And moving forward, they plan to report driverless miles each quarter, so you'll get a more concrete metric on their progress.
Good. More data points. How are they reaching customers? Big fleets, smaller ones?
It's a two-pronged approach. They're engaging directly with the really large carriers, but also using the Uber Freight network to connect with mid-sized fleets.
Ah, leveraging Uber Freight's reach. Smart.
Seems like it.
Yeah.
And they mentioned that for carriers, getting density out, lots of autonomous trucks running on a specific lane is really key to unlocking the full benefits.
Right. You need volume on a route to make it really work. Let's talk tech a bit more. Mapping and simulation. How critical are those?
Very critical, according to Aurora. They see their high-definition mapping as foundational for safety. It helps the trucks anticipate what's coming, gives them that extra layer of awareness, a strategic advantage, they believe.
Like knowing the road intimately before you even drive it.
Exactly. And simulation's the other key piece. It's their virtual proving ground for testing the AI driver in tons of scenarios, especially those rare, tricky edge cases you might not see often in real life.
Okay. And does mapping new lanes get easier over time?
They think so. They mentioned that expanding to new freeway lanes should become progressively easier because fundamentally, the interstate system has a lot of similarities.
Self-similarity, so the learning curve potentially flattens.
That's the idea. It suggests they could accelerate expansion once these initial lanes are really nailed down.
Interesting. Okay, pricing. How are they going to charge for this?
They said it's still a bit early for specifics, but the core message is that the Aurora driver should offer huge economic value. Through enhanced safety. Those fuel savings we talked about, potentially 12 to 34% plus better truck utilization, less wear and tear, all adds up.
So the value prop is strong.
That's the pitch. Their pricing strategy will likely try to balance gaining market share with capturing that value. So maybe suggesting a premium product, but one that pays for itself through savings.
A premium service justified by the ROI.
Okay. Last tech point, hardware evolution. Any risks moving between generations? They emphasized their software architecture is designed to be transferable. First gen, the coming Fabrinet second gen, the Continental third gen, the software should adapt.
So it's built for upgrades.
Hopefully. They have teams working specifically on managing that integration smoothly. And of course, moving to the newer hardware is also what enables the higher production volumes they need for fleet expansion.
Right. Scale depends on the new hardware.
Exactly. There are always risks with hardware transitions, naturally, but they seem focused on making that software portability mitigate potential issues.
Okay, that really covers the key points from the call. A very comprehensive overview. Now let's shift gears to our signature segment. This is not financial advice.
All right, the outrageous but plausible trade idea.
Lay on us.
Okay, so given Aurora's successful commercial launch, right, and this projected big drop in hardware costs with their second-gen kits, here's the purely speculative thought. Maybe consider a long position in a, let's say, publicly traded trucking company that's currently quite distressed. Specifically, one with significant debt coming due in late 2026 or early 2027.
A distressed trucker. Why?
Well, the high-risk thesis is this. If Aurora keeps proving its tech works safely and economically, and if those hardware costs really do come down like they expect, then maybe, just maybe, this struggling trucking company becomes an attractive acquisition target for Aurora around that late 2026, early 2027 timeframe.
Aurora buying a trucking company.
Potentially.
Yeah.
It could be a way for them to rapidly scale up their operations, get instant access to routes, infrastructure, customers, drivers even, without needing the colossal upfront cash to build their own huge fleet from scratch immediately.
An M&A shortcut to scale.
Kind of. But look, this is highly speculative. So many things have to line up perfectly. Aurora needs to keep executing flawlessly. The target company needs to, frankly, survive until then. And Aurora needs to actually want to make such a big acquisition.
Right. Lots of ifs.
Massive ifs. So please remember, this is purely a thought experiment. Absolutely not investment advice in any way, shape, or form.
Understood. A truly outrageous but, faintly plausible scenario to ponder. Okay, that was our deep dive into Aurora's first quarter call, a really pivotal moment, moving from R&D into actual commercial driverless trucking.
Definitely a milestone quarter for them.
We've hit the financials, the huge significance of the launch, their expansion roadmap, the tech advancements, and even that speculative trade idea. What really stood out to you in all this?
For me, it's the transition itself, moving from development promises to actual commercial miles and revenue, however small initially. That's the critical leap.
Yeah, proof of concept turning into actual business. So for you listening, what questions do you still have about where autonomous freight goes from here?
We'd love to hear your thoughts.
Join the conversation. Let us know. This is Talk Tickers, helping you get informed quickly.